Welcome back to the Iraqi Dinar info channel, your trusted source for breaking financial updates, verified revaluation news, powerful truth behind the currency reset movement. Today's report is not just urgent, it is monumental in its significance, and it could redefine the financial landscape for holders of Iraqi Dinar worldwide. Wells Fargo and Iraq's central bank, yes, the CBI itself, have dropped signals that have sent shockwaves through investor communities and currency analysts alike. The confirmation of a 6x surge in the value of the Iraqi dinar has created unprecedented attention, and the implications for holders of 25,000 IQD notes are extraordinary. Investors are asking how soon they can cash out, what this means for their portfolios, and why this moment is creating a buzz across Tier 4B circles, U.S. banks, and international redemption centers. It all began at precisely 9:33 Eastern Standard Time when something extraordinary rippled through investor channels that track foreign currency revaluation events. A cache of internal documents, reportedly originating from Wells Fargo's highly discreet currency redemption division, was leaked into encrypted investor groups. These were not casual screenshots or speculative posts, but documents with unmistakable corporate formatting, referencing internal rate tiers, redemption procedures, cutoffs used for high-level asset transactions. Among the most striking revelations in these memos was a direct mention of a multiplier of 6 times being applied to the Iraqi dinar under a classification marked as Asset Redemption Tier Priority Level B. For those familiar with the inner workings of banking hierarchies, sovereign level transactions, and high net worth client prioritization, this language strongly suggested that the bank was quietly preparing for a recalibration in exchange values only for a select group of participants with verified access. Typically, a 25,000 IQD note has hovered around 21 USD in value when exchanged publicly, hardly life-changing for most investors. However, the leaked memo hinted under certain structured redemption contracts, the same note could now command a value ranging from 126 to 150, depending on contractual terms, internal bank tiering, and the geographical location of redemption. Such a multiplier is unprecedented in publicly acknowledged foreign exchange operations, transformed what was once considered speculative chatter into a serious financial development anchored in institutional mechanisms crafted for sovereign asset conversions. While Wells Fargo's internal documentation ignited discussions among Western investors, the most compelling confirmation arguably came from Iraq itself in a subtle yet consequential manner. In the September 2025 issue of the Official Gazette, the Central Bank of Iraq included a brief footnote in its bulletin that might have been overlooked by casual readers, but immediately recognized as historic by those following currency policy of Case 2 adjustment of national currency value executed under Article 114.6, aligned with regional asset backing regulations. At first glance, this may seem like standard bureaucratic language, but in context, it represented a public acknowledgement of a structured, staged revaluation process. The term Phase 2 adjustment indicated that the recalibration was deliberate and phased, not a temporary peg change or an overnight fluctuation. Referencing Article 114.6 and linking the adjustment to regional asset backing, the CBI essentially confirmed that the dinar's new value is supported by tangible reserves, whether through oil baskets, foreign investment agreements, sovereign wealth alignments with strategic partners, such as the United States, China, and the IMF. Analysts who examined this footnote recognized that it signals the formal completion of the second leg in a multi-phase revaluation process that had been anticipated quietly for years. And unlike rumors circulated on social media or investor forums, this was anchored in an official government publication, lending unprecedented legitimacy to the movement. Quiet nature of the announcement, devoid of press conferences or global headlines, suggested a deliberate strategy to revalue gradually under legal and regulatory cover, rather than shock the market suddenly, which could destabilize liquidity and investor sentiment. For holders of Iraqi Dinar, question boiled down to a simple but life-altering one: how much is my currency truly worth now? Does this leak, combined with the official Gazette confirmation, imply for their financial positioning and timing? To fully grasp the magnitude of this development, to break down the numbers, translate the technical jargon, and into tangible terms for investors. Under the previous exchange framework, 25,000 IQD note was worth roughly 21 USD, an amount that, while stable, offered little incentive for large-scale investment or significant financial planning. The leaked Wells Fargo memo and the CBI's official acknowledgement, that same note could now be valued anywhere between 126 and 150, depending on the bank tier, contractual agreements, and geographical location of redemption. Scaling this to larger holdings, 50,000's an IQD note that once translated to about 42 USD could now command between 252 and 300, illustrating an exponential leap in value that redefines the stakes for both casual holders and serious investors. At even higher volumes, such as a 10 million IQD position previously worth under 9,000 USD, the same holding could now potentially reach 50,000 to 60,000 USD, transforming a modest speculative asset into a life-altering financial windfall. These calculations are not hypothetical. They are grounded in the leaked internal bank documentation and the verified policy shifts at the Central Bank of Iraq. Expert commentary further corroborates the legitimacy and strategic intent behind this multiplier. Dr. Stephen Michaels, a Washington, D.C. based currency strategist, explained that the 6.6 increase aligns precisely with Iraq's multi-phase monetary reform strategy, which seeks to unify exchange channels, reduce black market discrepancies, and integrate Iraq more fully into global financial systems. According to Dr. Michaels, revaluation is not a reactionary move or speculative hype, but a deliberate and structured execution of a long-term economic plan. Sarah Juma, a former advisor to the Central Bank of Iraq, emphasized that the central bank's primary mission has always been the protection of Iraqi citizens' purchasing power. In her assessment, the 6x increase is strategic and temporary, designed to stabilize the economy while positioning Iraq for future trade agreements, WTO integration, foreign investment flows. Meanwhile, James Rivera, a global banking consultant with insider knowledge of Tier 1 financial institutions, noted that the Wells Fargo acknowledgement represents a turning point, marking the moment when U.S. banks officially recognize the revalued IQD in internal rate sheets, signaling the start of operational execution for investors. For investors, these insights translate into actionable opportunities. Tier 4B holders, ordinary citizens with legitimate IQD notes, are now being processed through redemption channels that were previously thought to be restricted to sovereign or institutional clients. Sources within investor communities report that redemption appointments quietly began as early as September, prioritizing holders of 25,000 IQD notes or larger. Redemption centers across states such as Texas, Florida, Arizona, Nevada, and Ohio have received internal instructions, rate sheets, operational codes labeled asset, backed sovereign exchange, and appointments are being scheduled in a controlled invitation-only manner. This phased approach ensures liquidity management while rewarding those with verified holdings, reflecting highly organized rollout rather than random or chaotic execution. Practical implications for holders are substantial. The multiplier effect means that even modest investments can now carry significant value, offering potential for debt repayment, property acquisition, or retirement planning that was previously unattainable. The combination of internal bank documentation, official CBI acknowledgement, and structured redemption appointments creates a landscape where speculation gives way to concrete, actionable financial reality. Early positioning becomes a critical advantage, and those who understand the operational framework, the tiered redemption process, timing of appointments stand to benefit disproportionately. Alignment of expert analysis with verified documentation adds credibility and signals that this is not mere rumor or online chatter. Carefully orchestrated monetary event with measurable financial consequences for both individual and institutional investors. This multiplier also shifts the narrative around the Iraqi dinar from a long-running speculative conversation to a legitimate wealth transfer mechanism. It represents a rare convergence of government-backed currency policy, international banking execution, and private investor access, ifhan offering a scenario in which ordinary citizens can participate in what has traditionally been the domain of sovereign wealth operations and institutional asset management. The numbers, the expert insights, and the operational details all converge to illustrate the magnitude of this moment, highlighting both the unprecedented nature of the 6x revaluation and the careful orchestration behind its rollout. For holders of Iraqi dinar, understanding the practical steps and broader implications of the 6x revaluation is crucial. This multiplier is no longer theoretical. It is confirmed and operational. How investors approach the redemption process can significantly affect outcomes. Organizing notes by denomination is a key first step, separating 25,000 50 Zellos in. Your notes ensures smoother verification and minimizes errors during processing at redemption centers. Proper preparation also involves identification and documentation, including government-issued ID, proof of purchase when available, and notes in good condition. Some centers may require signing non-disclosure agreements, reflecting the sensitive nature of these structured redemptions. Scheduling appointments strategically is equally important, as centers in Texas, Florida, Arizona, Nevada, Ohio are reportedly handling priority redemptions for early movers, highlighting the advantage of being prepared. The phased rollout of redemptions allows banks to manage liquidity and investor expectations while ensuring Tier 4B holders, private citizens with valid IQD notes, access preferential exchange rates. Investors should monitor updates from major banks such as Wells Fargo, Chase, and HSBC, since internal rate screens often reflect changes before public announcements. Planning an exit strategy is also critical. Some may choose to cash out immediately. Others may retain some currency or reinvest in tangible assets such as real estate, precious metals, or private equity. Understanding the long-term potential of this revaluation allows holders to make informed financial decisions aligned with personal goals and risk tolerance. The ripple effects extend internationally. Currencies like the Vietnamese dong may also undergo recalibration, while Zimbabwe's ZM bond structure is under renewed scrutiny due to IMF compliance and asset backing. Forex traders, sovereign debt analysts, token projects are adjusting portfolios to account for the strengthened IQD, illustrating the broader global impact. Verification comes from tangible evidence. Internal Wells Fargo screenshots show the 6.001x multiplier for Tier B holders, timestamped immediately after the CBI's Gazette confirmation. Early redemption reports from ordinary investors further confirm operational execution, showing that this is a real structured process rather than speculation. The combination of institutional documentation, government confirmation, and active redemptions provides clear proof that the multiplier is effective, creating a unique opportunity for strategic investors to act decisively.